You are 24. You have $47 in your bank account. Not $47 in savings. $47 total. That is everything. It is a Tuesday. A regular Tuesday. You stop at the gas station before work and put in $20 of regular. You pay at the pump. Approved. You exhale. That night, your phone buzzes. A notification from your bank. It is not a fraud alert. It is not a promotion. It is a charge. $34. Overdraft fee. The $20 you spent on gas pushed your account below zero, and the bank charged you $34 for the privilege of being poor. You stare at the screen for a long time. You did not borrow money. You did not ask for a loan. You just ran out. And running out, it turns out, costs money. You do not know it yet, but what just happened to you happens 1.8 billion times a year. And it made the bank's $15 billion last year alone. This is not an accident. Let's start with the thing that hits you first. The overdraft fee. Here is how banks describe it. We covered your transaction when you didn't have the funds. We charge a small fee for that service. Here is what actually happened. You spent $20. Your balance was $18. The bank covered the $2 gap and charged you $34 for it. That is a 1,700% interest rate on a $2 loan that you did not ask for. And here is the part that should make you put your phone down for a second. The bank knew. Before you swiped that card, their system ran a real-time calculation. It knew your balance. It knew the transaction amount. It made a choice, approve it and charge the fee or decline it and save you $34. It approved it. Not because it was looking out for you. Because $34 was more valuable than your $2 gap. The math was simple. You were not. And this is not one bank. This is all of them. Wells Fargo, Chase, Bank of America, your local credit union. The average overdraft fee in America right now is $26.61. Some banks charge up to $38. Some charge it multiple times per day. You can wake up with $0 in your account and owe your bank $114 before lunch. The people this hits hardest are people who cannot absorb it. People making $30,000 a year. People with $47 in their account on a Tuesday. People who are one tank of gas away from a fee that costs more than the gas. Being broke costs money. That is not a metaphor. It is a fee schedule. Now here is where the numbers get ugly. According to the Consumer Financial Protection Bureau, 9% of bank account holders pay 79% of all overdraft fees. Read that again. 9% of people pay nearly 80% of the bill. Who are those 9%? They are not careless. They are not irresponsible. They are people who live close to zero. People whose pay cycle and their bill cycle do not perfectly align. People for whom a $40 car repair or a $60 doctor copay is not a minor inconvenience. It is the thing that tips everything over. The average person in that 9% pays $450 in overdraft fees per year. Per year. That is a car payment. That is 2 months of groceries. That is $450 that left their account in $34 increments, quietly, while they were just trying to get through the week. And the banks know exactly who these customers are. They have the data. They see the patterns. They see account A drops below $50 every third week of the month. They see account B has had 11 overdrafts in 6 months. They are not guessing. They are reading a ledger. There is a term for this in the industry. They call it high engagement customers. High engagement. Not struggling. Not financially vulnerable. Not being actively charged more than they can pay. High engagement. The language is clean. The math is brutal. In 2022, the biggest banks in America collectively made $7.7 billion from overdraft fees alone. That number had peaked at $17 billion before public pressure started forcing some reforms. But even at $15 billion, even after the headlines, after the CFPB investigations, after some banks voluntarily reduced fees, the number is still $15 billion from people who did not have the money to begin with. But overdraft fees are only one piece of it. Here is where it gets really interesting. For years, and I mean decades, many major banks used a practice called high-to-low transaction reordering. Here is how it worked. Say you have $100 in your account on a Monday. You make 5 purchases throughout the day. A $3 coffee, a $12 lunch, a $7 app subscription, a $22 grocery run, and a $95 car payment that processes at the end of the day. Normal logic says, process them in the order they happened. The coffee went through first. The car payment went through last. You would overdraft once on the car payment. One fee, $34. But some banks reordered the transactions. Largest first. So the $95 car payment processed first, dropping your balance to $5. Then the $22 groceries hit. Overdraft. The $12 lunch. Overdraft. The $7 subscription. Overdraft. The $3 coffee. Overdraft. For fees, $136. On the same Monday, the same purchases, the same account. Wells Fargo paid $203 million to settle a class action lawsuit over this exact practice. Bank of America paid $410 million. TD Bank, Regions Bank, US Bank, billions of dollars in settlements across the industry for a practice that was, at its core, designed to maximize the number of times a low-balance customer crossed zero. The settlements came. The practice was reined in. But here is the thing about a practice that generated billions of dollars for 30 years. You do not just let it go because a judge said so. You get creative. New fee structures. Balance cushion requirements. Tiered overdraft protection that costs a monthly fee to opt into. The model changes. The revenue does not. Now let's talk about the thing nobody reads when they open a bank account. The fee schedule. Most major banks offer a free checking account. Free. No monthly fee. Until you read the asterisk. Keep a minimum daily balance of $1,500. Or maintain a monthly direct deposit of $500. Or hold a linked savings account. Or be enrolled in a premium tier. Or, the or list is always longer than you expect. And if you fail to meet any of those conditions on any given month, the monthly maintenance fee kicks in. Usually $12 to $15. Every month. That is $144 to $180 a year. To have a bank account, that is supposed to be free. Who cannot keep a $1,500 minimum balance? The same 9% who are paying 79% of the overdraft fees. The same people who are putting $20 of gas in at a time because filling the tank means skipping something else. The minimum balance requirement is not a neutral rule. It is a test. Pass it and banking is free. Fail it and you are charged for the privilege of keeping your money at an institution that is using that money to make more money without you. And here is the quiet part. When your $1,500 sits in a checking account, the bank lends it out at 7%, 9%, 12% interest. They make money on your money. Then they charge you $15 if your balance drops below the amount that makes them profitable. The house always wins. But in this case, the house wrote the rules, owns the building, and charges you rent. There is one more layer to this. And it is the one that makes the whole thing self-reinforcing. When you overdraft repeatedly, your bank may close your account. This gets reported to check systems, a database that most banks check before opening a new account for you. If you are in check systems, most traditional banks will not take you. So you go to a check cashing place, or a prepaid debit card, or a payday lender. Check cashing, 2 to 3% of the check value, every time you cash a check. If you make $2,000 a month and cash every paycheck there, that is $40.60 a month just to access your own money. Prepaid debit cards, monthly fees, reload fees, ATM fees, inactivity fees. The fees have fees. Payday loans. The average APR is 391%. You borrow $300 to cover a bill. 2 weeks later you owe $345. If you cannot pay the $345, you roll it over. Now you owe $390. Then $440. The loan that was supposed to be a bridge becomes a basement. The people who can least afford fees pay the most fees. The people who most need affordable credit pay the highest interest rates. The system is not broken. It is working exactly as designed. Just not for you. And here is the real kicker. None of this helps your credit score. Paying your overdraft fees on time does not build credit. Using a prepaid debit card does not build credit. Catching up on payday loans does not build credit. You are paying and paying and paying, and the scoreboard that determines your financial future does not move. The rich get richer. That is the cliché. But the more precise version is this. The poor get charged more, earn credit for less of it, and exit each loop with less money and the same score. I want to be honest with you about something. If you have paid an overdraft fee, you were not stupid. You were not careless with money. You were caught in a system that is specifically calibrated to catch people in your situation at your exact moment of vulnerability. The fee is not a punishment for being irresponsible. It is a product. You are the customer. And the product works best when you are one transaction away from zero, because that is when you are most likely to cross it, most likely to trigger the fee, and least likely to have the margin to avoid it next time. This is not a conspiracy. It does not need to be. It is just a business that found its most profitable customer segment and built its products around them. The customer just happens to be the person who can afford it least. Knowing this does not make the fee go away, but it changes what the fee means. It is not evidence that you are bad with money. It is evidence that the math was stacked before you got to the counter. So what do you actually do with this? 3 things. First, look up your bank's overdraft policy right now. Not the homepage, the fee schedule. If it says $35 per transaction with no daily cap, you now know what that means. Second, look at credit unions and online banks. Many charge 0 overdraft fees. Some offer small overdraft lines of credit at 0% or very low interest. The no-fee checking account exists. It just does not advertise during NFL games. Third, if you have been hit with overdraft fees, call your bank and ask for a refund. Say this exactly: I have been a customer for X years. I was charged an overdraft fee, and I would like to request a one-time courtesy refund. Banks reverse these more often than they will ever tell you. The ask is free. The $34 was not. You are 24. You have $47. You just got charged $34 for having $47. But now you know what you're dealing with. And knowing what you're dealing with is the only thing that actually changes the math. The bank is not your enemy, but it is not your friend either. It is a business. Start treating it like one.